Good morning. Jeffrey Friedman, Senior Commodity Broker, RJO Futures, with morning comments on the stock index futures. Word of the day, and I always have the word of the day, I'm going to have to say that it is non-farm payroll. And everything that non-farm payroll implies. It already came out. It was a disappointment. Disappointment would be bad news. Stock index futures rally. What happened? Good news is bad and bad news is good. What do I mean? What I mean is, if we have bad news, then the Federal Reserve cannot start the tapering as aggressively and as quickly as other people have indicated by good news. Good news meaning the economy is expanding, we're recovering, we don't need help from daddy with stimulus to our economy, i.e. the Federal Reserve. So if the news is bad, then we do need help from daddy, and we need our allowance to pay our rent, even though we moved out already because we graduated from college. Get the concept? So good news is bad and bad news is good. Now, have said all that, we do have in the background Syria. That would be a negative. That would be such a big negative that good news would be good news and bad news would be bad news. Attacking another country would have negative implications, in my opinion, on the stock market. So, where are we? Looking at the line in the sand on a technical point of view for the charts, looking at the September S&P future contract, we are right at a pivot point. Okay, the pivot point would be 1655, 1658 on a closing basis for the week, 2 days in a row if you can. Above those numbers, so we'll draw a line in the sand, 1660, a close above that would be a trend change in my opinion. What trend change? The short-term trend change. The long-term is bullish. We've been in a 4-year bull market or 5-year bull market. We're up 15% for the year. It's hard to say we're in a bear market. But short-term, we were in a correction phase because the high of the move was 19.5 to 20% higher than the previous year's close, December 31st. So looking at it through that point of view, you have 3 different phases. You have the long-term, the middle, and the short-term. The short-term, we might be at a pivot point to change, okay? Keep that in mind. If we fail, and this is big-time resistance and can't go any higher, then I expect us to probably try to test the lows that we made in the correction phase or even lower to 1600. If we break through and close above, then I expect us to try to test the old high, 19% higher, around 1700. It could be 1705. It could be 1692. September S&P future contract. Broadest index, we could talk about the Dow, we could talk about the NASDAQ, but I prefer to talk about the S&P for a concept of direction and what's going on fundamentally and technically. Remember always, trading futures or option to futures involves risk of loss, not suitable for everyone. You should be calling me, and we can talk about any market you want on a fundamental or technical point of view. Good luck and good trading.